Markets around the world are making new all-time highs, but it's the stats that just came out that might surprise you, with one of the most reliable indicators of the year finally dropping. But more importantly, it's the options world that got us to this point. So what is worrying and what is good about options right now? Today we deep dive into the S&P 500 and why it's moving this way. We'll also be talking about the central bank liquidity that's starting to drop off as we go towards records. And of course, what's going on with the Bitcoin ETFs. Yes, it was supposedly going to be a huge rally for Bitcoin, but of course, it was a buy the rumor, sell the fact. And as we've reported for a couple of weeks, it looks like we're in that Wyckoff distribution. Could it get a lot worse before it gets better? Join us as we cover stocks, commodities, and cryptos around the world. Well, welcome back everyone to the Daily Show where we talk about markets around the world. My name's Tom and we've been running this show together for over 3+ years. If you love everything to do with markets, including the macro lead indicators and the hottest charts, then remember to subscribe and smash that bell icon. So the week's good and bad over the last 24 hours. Nvidia finally reaching that 600 price target, and of course Tesla continuing to sell off, which doesn't seem to have any good support on it, which we'll look at later on today's show. But before we get into the dark pool activity, let's have a look at Wayne Whaley's new research report, which obviously comes out over a 2-month period. And he shared this over on X, and I think there's some great stats here to look at. Basically, we see a 35-2 track record in favor of the bulls in years such as this. And even in the bad years, the pullbacks were not actually that brutal in terms of the overall year. Now, there were some nice pullbacks, though, throughout the middle of the year themselves. So why is this important? Well, we find ourselves in an election year, historically a bullish year itself. We find ourselves with one of the better stats showing it that maybe the market will actually pick up this year. And of course, everybody's still talking about AI. And depending on who wins the election as well, we might even be talking about corporate tax cuts in 2025. So why is this all important? Well, of course, it comes down to some big stats. In particular, April having some massive moves on it in the markets. We all know that April is the most important month of the year other than January to give us big stats, and we will be looking at it very closely. So things could be heating up, but of course we expect Q1 still to be up, down, and all around in terms of volatility. And we'll go through that later as we look at options and of course some of the unusual activity across the board. But I want to mention something that's almost scary when you look at it from the stats. Now, my favorite company is obviously Microsoft. I also like Nvidia as a stock. But did you know that over the last month, 57% of the S&P 500 value move was from these two stocks, Nvidia and Microsoft making up a huge percentage of the gain. So obviously, if either start to fall off, there's going to be a huge amount of momentum switch in these markets. Another couple of firsts that have just happened over the last couple of days, growth has finally hit a new all-time high versus value in terms of ratio. And a lot of this is driven by, of course, AI itself, with over 30% of the S&P 500 now being made up of technology. I think it's the first time ever we've hit such a number. So where do things actually get worse? Well, one of the indicators is going to be, of course, CTAs. And everyone's been talking about CTAs being overbought, and they certainly are. They're basically maximal. They're max in, and they are going hard on this market. But at the same time, if this starts to turn, have a look at the types of reads when we get into a super overbought zone. Like any indicator, when it starts to switch, that's going to be important. Of course, this is telling us that we are getting a huge amount of momentum shift from some people that could be in the know. So if this happens, remember we will be reporting it on the channel. And of course, make sure to subscribe for that. Let's now talk about earnings quickly here before we go through the rest of the charts. And I just want to really reiterate that this is where the market is expecting good things to happen based on the fourth quarter earnings. Of course, fourth quarter earnings growth in the Mag 7 is very important, and Tesla's kicking it all off this week. So of course, if it doesn't really do it, Netflix doesn't do it, and a few other stocks don't really come through with the goods, there could be problems on the horizon. And that's going to be something that we will be needing to look at because big earnings is finally here. And of course, tech always kicks off all of the volatility in the markets. Another thing that we reported on in our previous video was the unusual anomaly that the Russell 2000 was still down in a bear market, probably reversing that slightly now to be about 19% down. And of course, the S&P 500 was at an all-time high. That's the first time in history we've ever seen such an event. And it really shows you that the market is really being bought up by the AI hype, and that continues to be one of the biggest drivers throughout everything that's going on right now. Another thing that's happened is, of course, the Shanghai Composite, the Hang Seng Index, and anything to do with China and Hong Kong has absolutely been hit through massively. And everybody's gone very negative on these markets, probably rightfully so. But at the same time, a lot of the arguments are negative GDP, things not looking so good. Just remember that markets can rally into these events, and that we expected when we started to see that capitulation, the potential of 2 weeks of down or around before possibly a turning point. And ultimately, price action will be one of our biggest dictators here. But we will be looking at it because there are always opportunities around the world. And on the channel, we talk about it a lot, the idea of an abundance mindset. When you're trading stocks, commodities, cryptos, currencies, anything like that, whenever you feel FOMO or fear, you tend to make poor decisions. Remember, there are lots of opportunities going on. You just have to be able to search and find them. There's always another one happening at any given day in the markets. It's your job to remember sometimes not trade, and that's a trade in itself. So where are the biggest issues going to come from over the next couple of years? Well, people think it's either US shadow banking or China real estate. In my experience, wherever we think something's going to happen, probably doesn't. And it's when we don't think it's going to happen in that area, it comes through. They don't call them black swans for nothing. They're generally in plain sight, but they're not usually talked about until they become a big problem. Just remember back to 2020 and how the market was buying up, and then all of a sudden things got really, really serious. Now let's talk about Fed funds speculation, which is driving, of course, the dollar. You can see the synergy here. It's an interesting chart, and it really shows you that at the moment, central bank liquidity, or not even that, central bank policy is going to be such an important factor. If you're a currency trader, I'd say 2024 is going to be a great year, and I expect some big trends to get started at some point in the first Q1 because we're going to see some central bank movement this year, which is going to be a lot of fun. Let's move over to semiconductor manufacturers and worldwide sales. Some interesting charts here just to have a look in terms of US industrial production and, of course, forward earnings across the board. Certainly, the market's getting pretty hyped on semis, and they've been buying them up big time. Now, let's also have a look at small caps because, of course, small caps are so far behind big caps and large caps and mid caps and everything else right now that could we be seeing an opportunity in small caps again coming through? Well, this is a chart that you might want to keep snapshotted, and we'll bring it up a few times and go through it moving forward. Let's now talk about some of the stats for the year ahead. What do we expect? Well, of course, we've talked about the idea that Q1 could be volatile with ups and downs and all arounds. And generally speaking, it's this January into February kind of 2 months later period that we expect stats that might be negative towards market. So as we drive towards potentially 5,000 for the S&P, just remember there's a good chance, at least in terms of stats, statistics, and other things going on, that we will see mean reversion and we will have a relatively decent pullback at some point over the Q1 period. Why is that, you might you ask? Because we do tend to have seasonalities. Double dips is something that does happen a lot in this period of time. And really, it's that April-March period that tends to bring through a lot more growth. In election years, it's not as strong as this, but what usually happens is we still get April, May, kind of June, July, August, then we'd have a drop-off. And then after we find out who wins the election, we tend to go quite strongly after that period in time. So what about the Chinese market again? As we mentioned, that 2-week data. So 33% of the time after seeing a capitulation point, which we saw late last week, we tend to basically have a new low being formed. We now have a new low formed, so that makes sense. And it could get a little bit worse before it gets better, but something we will be watching on this channel because I think it's going to be a key area. Let's now have a look at options. So why did the market stop where it stopped? And more importantly, what's going to happen next? Well, you might notice on this chart, there are 2 points that were really bought in. One point around 48.70, which could have been plotted the day before or around the close of the previous session, and 48.10. So these were the two kind of scenarios where markets would possibly go and gravitate towards. And as we talked about, 48.50 was a big area. So as it broke 48.50 into the open, the chances of moving towards the 48.70 were actually quite high. The question now becomes is if we break 48.70, where are the next levels? And it turns out that at this stage, 49.50 is really on the cards for this market. Now on the downside, where do we see some support? It's going to come in around that 4,800 level because that was such a huge breakout that did occur. And you'll notice here that we have a pretty big positive gamma style scenario with 5,000 now getting a lot of striking on it. And this has changed a lot over the last 24 hours as we continuously see this type of kind of situation play out. So 4,900 will be a zone as well to be watched. 4,950 also a zone. And every 50 points up to 5,000 are going to be key. But I would say that also 4,800 and 4,810 will need to be watched from the buyer's perspective. Because we broke through such a key point, if price action does manage to get back down to those levels, we'd have to see buyers recommit to the market. Otherwise, we could be looking at a false break, which will get quite nasty. And bears will be really hoping a false break occurs, because if that's what's happened and then we sell off, we could be in for a bloodbath moving forward. And the main reason is because of this, and it's got to do with put rights. In fact, there are many risks to the market which have never eventuated so far, and we've already brought this up a few times, where during 2023, everyone got a little bit too confident in put writing. So effectively selling puts into the market and selling them damn close to the market. We saw a lot of this in the back end of 2023 as well, and it's so far worked out. But when this unwinds, and eventually the market will choose to unwind it, you will see a brutal kind of couple of sessions. So just remember, the risk is always going to be in these puts because there are so many out there. And for now, it's held true for the first time really ever. But the scenario is that if somebody wants to have a go at it and the market decides, okay, now it's time to hit up this particular section, it will be brutal and it will be quick. So just keep that in the back of your mind for the rest of 2024, as I expect it to be the real narrative when eventually it does happen. Let's now move over to earnings. So of course we're here for Tuesday. After the close, Netflix kicks off big tech. Then we get Tesla, and then of course we've got Intel and some others. Now Tesla's probably going to be the most interesting one this week to see how that stock's holding up, being part of the Mag 7. But I would say Netflix also will move the markets quite a lot. These two tech tends to start it off. Then next week and the week after, we get the huge amounts of basically most of the stocks in the market reporting. And you can see here that actually January 25th is the biggest report session of the week. Now let's have a look at the big expected options moves. So of course, options markets are telling us that Netflix is going to move between plus and minus 8%, and that Tesla is going to move plus or minus 7% after the earnings. If you're not prepared for these types of moves, please be careful, because this is what happens. And often the best trades actually are after the news has come out. Whether you, especially if you're an option seller and you know what you're doing, they can be amazing periods in time. So what about unusual activity across the dark pool and just normally large trades? Well, we've had here some movement into the Chinese stocks, and while they may not have found their lows yet, there are some large trades starting to come through quite a lot of the exchange traded funds. Another thing that we've seen is some inverse S&P 500 hits, the biggest trade since September of last year. And this is a big deal because, of course, this could be saying, well, you know what? We're going to start betting on the idea that markets will actually start to drop, because remember, this is the inverse, and get back into these zones. It's been a while since we've seen a huge trade like this one, and it's all around this kind of level. So, of course, price action will dictate, but we do have this trade coming in. And it's not the only one. There are other stocks that potentially could be showing this. This is a 3x bull fund for the S&P, two massive trades coming in right near the close of the session. And what this is kind of telling you, that it could be some profit taking from people that have accumulated in this or even at lower points. If it's profit taking and markets do drive higher and we keep seeing this type of thing, of course, you always want to be cautious on it. It's not enough to go off just yet, but it is something that we are looking at very closely. So which stocks did well and which did poorly in terms of options? Well, we had 40 million, 0.3, I guess. So it was a bit of a higher than average day. 60% calls, which is a big number. And as usual, actually it was a little bit higher, 30% retail single leg traders. So when we have a look over here, you can see where the big trades were going in. And there were a couple of unusually large activities, but I would say that it wasn't really big in terms of the main ETFs. Russell, Qs, and S&P all underneath, with fairly decent balance between the calls and the puts across the board. It was mostly some single stocks doing well, and you can see it here on the board. Let's now move over to what happened in terms of the day, and it was a great session at the beginning of the session for TAN and clean energy. Now, these are two sectors that we favored a lot at the back end or the kind of, December period of 2023. Then we saw that rally in the Russell. It was really nice. And then we hit kind of some target levels around the Russell. And since that point, especially with these two, they've been really bashed around. Could we be at a turning point for TAN or clean energy? We'll probably need one more trade day in terms of figuring out what's going on there, but we will be reporting on it over the next couple of sessions. So stick around for that if you're interested. Now let's look at central bank liquidity. So we mentioned that both the US and, of course, the central banks around the world have both dropped liquidity in recent trade days. As we've driven higher in markets, it seems like they've pulled a little bit of the liquidity, a little bit of the tools have been taken off. And if this continues and markets drive higher, it's certainly a worrying sign. Is it enough to short off? Not really. It's just not enough. And we've seen that plenty of times. But it's one of the pieces of the puzzle that we'll talk about later. So we actually managed to get mean reversion on yields. We also talked about the US 10-year. And it hit 4.2, which gave us some interesting insights to treasuries as well. And so let's now take a look at treasuries. And of course, they're sitting around that 93, 94 zone that we talked about recently. And they could be in what we call an inverse head and shoulders, especially if they break through. I think the upside for treasuries here from a technical level is still pretty good. You can see volume is still out of control. Obviously, they're low historically from where they've been. And if we expect the Federal Reserve and central banks to cut rates even more around the next couple of years, you're probably going to see treasuries do quite well. Now, how well could they go? I think 109 to 120 is probably the best case scenarios over the next year. And the upside is good, but don't forget there could be still more downside. This was just our first level in terms of where we expected the markets to get to based on that 4.2% level on yields in terms of 10%, 20, etc. Now let's move over to what we've been seeing in terms of bonds. Have bonds fallen off? This is our bonds indicator. And you can see here it's still red, but it's not really dropping heavily. So no insights from the bonds yet. Good insights from transportations. This was a big move up. So Dow Jones Transportations absolutely went bonkers throughout the session, which is kind of a positive sign for further movement up in the markets. Home builders made a new high as well, another positive sign for how the market's perceiving things. And I wanted to bring in another one, which is iron ore. I like to look at iron ore around Chinese New Year coming up, and it hit one of my targets recently, which was really good. Of course, we loved iron ore in the back end of 2023. Vale, one of our favorite stocks at the period of time. And in subsequent weeks, of course, it's looked kind of poor. But if we do break through this 144, it could be a big year for materials as well. So even though the stats are still pointing towards it not being, if this type of stuff does break out, and of course we see these things occur, 160 could certainly be on the cards for iron ore, something to be watching. Let's move over to the US dollar. So we're pretty bullish on the US dollar at this stage. Obviously, the reasoning is we kind of want to see that 103.80 to 104 zone. This is pretty important. Big breakout recently with pullbacks hopefully being met by bull demand. And it looks like the dollar is kind of driving higher off that area. And that's leading into some decent moves throughout a couple of currencies. And of course, we've also got some moves through gold here. So we talked about the 2015 level finding some buys. Now, we didn't quite get down to that zone. I think we got 2017 was the zone we got down to. But there is a chance that there's a buyer in here that's wanting to push higher. And of course, if we get through 2040 again, I would say we will probably break 2060. Now, I am a bit of a fan of gold, usually in the back end of January. It's one of my favorite times usually to have a look at it. And it's certainly come off some of the key levels. We talked about 2003 several times on the channel together, and we got some nice bounce off that, which is a good sign. We've then since breached this area up here in terms of the high supply, and we pulled back a little bit. So again, we still follow through here, 2060 to even 2100 could be on the cards. So some interesting moves coming up for gold. Now we move over to oil though, and oil did finally do it. It actually closed a daily above that 74 target. Now we've talked about 70.50, I feel like a lot over the last week or two, and we've been yabbering on about it, and finally seeing a little bit of bullishness coming back into oil has been nice. So could we move to 78 a barrel? I think that's certainly a possibility. Obviously, we've just got a daily high break, not a wick closure or anything like that. So it's a little bit weaker, but I think some people will be scaling in. Obviously, we've broken through that trend line as well. So it's a very interesting point for oil. Probably going to be a short-lived rally, but everyone's been expecting this for a long time. Obviously, we were very bearish on oil up until this point of hitting around 67 to 69 a barrel. And since then, we've seen some nice price action on the low. So I'd like to see oil kind of continue up and hit 78 a barrel over the next coming sessions. Let's talk about Tesla now. So its earnings. I don't know which way it's going to go. If you do, well done. But I can tell you the price action looks absolutely horrendous at this point. Obviously, watch reaction here is just something I put in from the last high. It wasn't good over the last 24 hours, rejecting again into this earnings. Now, there's going to be a lot of speculation about how bad can it get, but it's plus minus 7. So let's just get a measurement tool out and have a look at this. If we go minus 7%, we'll push a new low underneath 193. Now, if we do that, I think there could be some interesting areas around there. So what I would do is I would put a line here and maybe an alert and watch that space around the earnings period. Now, conversely to that, if we do end up having a good kind of period and it goes up plus 7, you're probably going to go to this previously most traded zone, which could bring in bears. So if it just instantly goes in here, the opportunity is actually not very good. And the reason is because this will be where some targeters will be. So the big thing I think is if it goes to the downside and breaks to a new low, could be an interesting trade there for day traders. And that's the thing about earnings. Some people look at it and say, oh, I hate earnings because it scares me. Fair enough. But it can also be opportunity depending on the types of instruments you use. Options traders tend to like earnings more than anybody else, though, that's for sure. Now let's move over to NVIDIA. Hits 600, goes to about 602, 603, and then sells off a little bit back into the 590s. Now, this is still a very strong chart. There's really no signs of it slowing down yet. Did it hit a target? Sure. Remember, Wall Street's target 660 by the end of the year. But this was just a classic kind of A equals B. And it does show you, in this case, it's pretty easy to hold because it keeps making a series of higher highs and higher lows. But yeah, it's a very strong stock. And at this stage, not necessarily super overpriced. And what I mean by that is in terms of ratios, if you actually look at it over time. But yeah, I mean, it's going to have to hit some lofty expectations. So a lot of people won't like that comment, but it's just based on ratio. So a lot of people said, well, it was cheaper. And it was for a little while in terms of previous ratio trades, but now it's got back to the exact same thing. So 600, everyone thinks it's worth 660. Hey, I don't know. Price action has hit one of the targets that I think is pretty good. And if you're holding it for a long time, you probably don't care. Now let's move over to PayPal. So this was one of the big discussions over the last couple of weeks in terms of breakouts. And I liked this a lot last week. I thought it was really good. And of course, it did rally up higher throughout the session and then sold off fairly brutally back down to this really nice trend line. So what this has done is it's kind of given us a potential head and shoulders breakout. It's given us a lot of nice wicking action here. It's obviously pulled back to the trend line. And it could be a point where PayPal is trying to turn a corner for the stock. Now, that doesn't mean that it's a great investment, it's a fantastic stock or anything, but it has been beaten down for a long time. This is one of the most positive signs we've seen in this stock for a very, very long period. Let's now look at the Chinese market from the price action standpoint. You'll notice that the Hang Seng here has come down to 14,800 zone. Now, this was the previous low of 2022. Not all markets are equal. While the US is making new all-time highs, we've got markets getting absolutely obliterated over here. And if you really put it in perspective and we zoom out, this is a weekly chart, remember, we are getting back to prices. I just want to report this. We're getting back to prices of 1997. Yes, you heard that right. 1997, 2000, and 2008. So not every market around the world has been doing super well. And this one in particular has been doing absolutely terribly. And if we go over to something like CQQQ, which is more like the Qs for China, you can see here it's capitulating at the same time, falling to new lows. Very important point. What happens here will be interesting. And we are in capitulation. Look at these brutal sells from the Chinese market. So this is the time that everyone's super fearful. Fair enough. It looks absolutely horrendous. But we will be looking for price action movements. And it's I would say wiping out a lot of people's stop losses, unfortunately, especially over the last 24 hours. All right, well, let's now take a look at the German market. You can see it came up to our most traded zone where we thought bears might sit and did have a little rejection. But let's break down the smaller timeframes here. We're going to look at a 15-minute chart and just break down what's happened so far. So you'll notice that the markets kind of got to this point. They sold, they came up, they sold again, and they've rallied. I'd actually like to see it hit into this zone again, then sell, then get through 16,600 And for that to be actually a fairly decent swing, potentially towards the short side, I'm not sure it's going to happen, but this is obviously a very important point. You can see how the market interacts with it. And if you're a technical analyst or somebody that's looking at these charts and you nail something where it actually hits a level and then reacts to it straight away, you're certainly starting to do very well if you can do that fairly consistently throughout time. It's kind of like, why did gold stop at 2003? Well, there are certain reasons, but that was just hit, and you would think, well, that wasn't going to be a zone that would get targeted. It got hit and instantly rejected off it. So yeah, if you can start to nail these kind of levels, it is quite important. And of course, nice to see that the German market was reacting to it. Means it's acting relatively technically, and we'll be looking for more results moving forward. For the Aussies out there, what have we got going on? Well, a market that looks like it's trying to recover. It does look like it's trying to break out to a new all-time high. Got that pullback in it, almost to the weekly 20, which is kind of cool. And then we saw a nice looking bullish hammer. And you can see here it's coming through with the goods. Now, there are some banks actually that have been breaking out in Australia. And if you're an Australian viewer out there, you would know that our banks do drive the market a fair bit. And that's a positive sign. But this is a huge resistance. And of course, we breach this, you're going to go into what usually is going to be a fairly decent momentum move. Let's move over to the US markets where everything's happening. Russell 2000 putting in a pretty good session, and you've got to like the type of action that you did see there. It looks like these markets are trying to drive higher at this point, and you can see here we're back at that resistance being that 1990 zone. If we do breach through here, I could see a pullback coming at some point, 1950 kind of level, and then seeing a rally through. Russell might have a nice trade on it as well that could come in the next couple of sessions. So we'll be watching that one closely. NASDAQ, hey, your guess is as good as mine. Just looks like it's going up. You could say, well, look at this shooting star, man. This pin bar up here is looking pretty negative. I think it's just one candle. It's not enough to go off. Obviously, you might want to set alerts above these types of highs, because if it does breach and close, it's probably going to squeeze further. Now, if we get 2 pin bars and we get what we call a tweezer rejection, then we can start talking about rejection levels. But we're in uncharted territory on a lot of these. So you're really using things like fib expansion tools and other things to predict where it's going. And we don't have any structure up there just yet. US 500 time. So we talked about the 4800, 4810 level from an options perspective. That was also the previous kind of resistance, which could become support in terms of role reversal. This area here will be important along with the 4780, because that's going to be where that daily 20 moving average, which has so far held this market up, is there. Now, I do think the daily 20 is worthwhile having on your charts, because as you can see here, we've kind of held it and held it. If we get a breach through that along with structure change, maybe that's going to be the mean reversion time to get further down. And at this stage, the market is still looking relatively bullish with pullbacks to be met by bull demand. Now, where things are looking a lot nastier has to be the crypto market. We got through 40,500. We've obviously talked about this being a potential Wyckoff distribution, and things aren't looking very good. You could break down where you want to go bullish on this now, because you've got some nice structural change levels. And a lot of those are going to come in at 43,600 and around 42,000. Let's call it 300 would be a good breakup. So we're looking for either the market to quickly switch and go bullish and then feel a little bit better about it, though you still will be in trouble here, or this is actually the sell. This is pretty much where people would also be looking at selling off further and adding to their sell levels. So you can see how important it is. Big rejection, big closure underneath. 36,000 is around the next level for Bitcoin at this point. And then, of course, 28 would be sweet. But in both cases, I am actually quite bullish on the idea that Bitcoin could improve throughout 2024. And it's got to do with the ETF, which obviously so far hasn't been working out, which is totally normal. I mean, we rallied so much in. It was a buy the rumor, sell the fact. But at the same time, it also has to do with the halving event. So I think there's a little bit of stuff going on with Bitcoin that will be very exciting. This is not necessarily the end or anything. I just think that it's due, and it would be cool to get back to 36. And of course, a 28 would be really sweet on those cards. What about for the rest of the week ahead? What other things do we have going on? Well, there's a lot of Euro news coming out on Wednesday. We obviously have flash manufacturing PMI for the US as well. And then we scroll down and you can see we have some GDP, some unemployment claims, ECB press conference, which no doubt will move a little bit around the markets. And then we have the US core PCE price index on Friday. This week is about big tech earnings. Watch Netflix, watch Tesla more importantly, and see what the sentiment's doing. We'll bring in our beats and misses as well for subsequent videos, so make sure to check that out and we'll see how it's all going this earnings season. And if you enjoyed today's video, remember to subscribe, smash that like button, and we'll see you in the next one. Bye for now.